Welcome back, everybody, to Whiteboard Finance Saturday live stream. Thank you so much for joining me again every Saturday at 12 p.m. noon. I didn't post any new videos since my Sunday stock market recap this week. I've just been super swamped. I'm proud to say that my wife and I are looking at a house and putting in offers for a house. We haven't landed one just yet. Maybe it's because I'm a notorious lowballer, but hey, just like my stock investing philosophy, I'm all about value. So let's get right into it, everybody. What we have here is that equity is extending the slide for this week. So I'm going to show you guys my screen here. I'm also going to show the FinViz map. Let me see if that transferred over. Perfect. So you can see that we're all pretty much in the red here. So this bodes a bigger question that I've been asking over the past 3-4 weeks now. Are we in correction territory or possibly even a recession if things keep moving forward this way? So that's what I'm curious to hear about, you guys. Let me see here if anyone's joined us on the chat. We have a couple people watching. Let's take a look at the chat here. Okay. Okay, thank you for everybody that's joined us. No chats just yet. So yeah, let's keep it moving here, you guys. So let me go back to FinViz, and the biggest loser, as you can see right in the middle of the screen, is Apple at almost 10% down for the week. So this bodes the question, are you guys buying this dip? Is Apple worth buying at this dip, or do you still think that it's potentially overpriced? I haven't done an in-depth analysis, but I think I will work on that later today and create a video to see if Apple is worth buying or not. And also, if you haven't joined my private stock market membership, The Informed Investor, I actually have a Black Friday link down below. It's going to be 75% off, most likely only once this year, you guys. The only time I'll do this again is next Thanksgiving. So if you haven't joined the private stock membership group, it's growing every day, and I'm glad to say that there's people in there, they're contributing, and it's a pretty good discussion so far. So Microsoft, as you can see here, is down almost 4%. Microsoft is the big fan favorite, the Whiteboard Finance fan favorite. Let's see if anybody's joining us here. Baby, oh, how you doing, Baby? Thank you for joining us this week as well. Peter, thank you for joining us as well. Appreciate it. Baby's saying, people will think that I sleep in front of the computer, but I just really love your live streams. Thank you so much. Maybe there's truth to both of those. Thank you so much for joining, Baby. I appreciate it, buddy. Peter, how about Amazon? Is it at a buy at this level? So good question. I may or may not own Amazon, so you got to check out the private membership group. But no, all joking aside, I am a fan of Amazon. Let's click into it here. Maybe we can learn a little bit more. Okay. Let me pull it up real quick. So you can see that it's just been getting crushed mostly over the past, I want to say month. It's pretty much finished lower than what it started with. Year to date, it's still up a little bit. You can see that we started the year on January 2nd, right around $1,200. It's currently at $1,500. It had a great run up here, and then things just started to fall apart right around October. If you look at the actual numbers here, the PE ratio is still 84.2, which in anyone's mind is definitely not value territory. Typically, we look for PE ratios of 20 and below, and that's even stretching it a little bit. Honestly, Amazon is a growth stock. They've been in growth mode for the past 3 years at this point, 5 years at least. And you can see here that if you bought back in the mid 2000s, or excuse me, 2010s, you can see that it was only at 290 in January 16th. So in 4 years, you would have done pretty well for yourself here, earning about $1,300 more per share, even with this decline. So to answer your question, Peter, it all depends on if you have a long-term outlook on Amazon. I do like Amazon. I do own them. I've been buying them up ever since I was in college, so my cost basis is pretty low because that's when I actually signed up for Amazon. I think it was 2009. And you can tell when you log in, it says you've been a member since, whenever. So I signed up. I think this was my junior year of college, and I liked the service. I bought some books through them, and I could see the potential for Amazon. So that's ultimately why I bought it. At this point, again, to answer your question, it just depends if you have a long-term outlook on the company. I think that I mention this pretty much every time someone asks me about Amazon, is that if you have a long-term outlook on the company or a long-term outlook on Amazon, I think they're trying to get involved in every facet of everyone's lives. So what do I mean by that? I mean that with the Whole Foods acquisition, you can see that they're trying to ingrain themselves in people's everyday needs like shopping. They're trying to get into prescription drugs. So I think they're going to play that off as, maybe like a pharmacy play, or just, being able to ship you your medicine right directly. That way you don't have to go to like a CVS or a Walgreens or a more traditional pharmacy setup, or like a local drugstore. They're obviously getting into self-driving delivery. They're opening up those franchises for people to be able to be a delivery service and have people working under them. So if you've ever gotten packages on like a Sunday, those are all private contractors delivering those packages via some of the bigger carriers, but I know Amazon's trying to get involved in that. They're also trying to get involved in capital, so lending money, lending loans. So what they're doing with some of the FBAers, and FBA is it stands for Fulfilled by Amazon. So whenever you go on YouTube and you see people with, Lamborghinis in their garage saying, I made $1 million on Amazon FBA, that's kind of what they mean by that. So Fulfilled by Amazon is essentially a logistics service provided by Amazon, to where you source your goods, you source your products, whatever you create. It could be, widget X, whatever. You send it to Amazon, they keep it in their warehouse. So you don't have to hold any inventory, and not only do they stock it, they also ship it. They handle all the logistics of your business, and for that you obviously give them a fee. And then they're going to get into food and delivery of that, and just, I mentioned this, I believe, last stream, where there was a picture, it was a cartoon that says, "Welcome to the United States," and in small font below it said, "An Amazon company." So I thought that was pretty funny. So yeah, to answer your question, Peter, I just think it all depends on if you have a long-term outlook. This is definitely, a good buying opportunity if you're going to be in it for the long haul, because I do think Amazon and Bezos, they're just so ingrained into everyone's lives at this point. They're not going to get disrupted anytime soon. So that's just my personal opinion. So let me see if we got any other chats here. Okay, we got about 26 people on the live stream. That's great. Great to see everybody here. Bob, hey, how you doing? Nice to see you, Bob. Mr. Pick, always a pleasure. Or excuse me, Dr. Pick. Dr. Pick says, I am watching Trupp, maybe a super buy. Okay, let's look into that. Sales Education Channel, how you doing? Good afternoon. Nice to see you here. Terrence, hello. Greetings from Singapore. Wow. Okay, WhiteBoard Finance is going international, you guys. Let's see here. Amazon makes up the largest percentage of my portfolio. I believe it's a good buy right now, but buy in increments, at least my opinion. Absolutely, you guys. You got a dollar cost average. So I think that's the key to anything, especially if you have a long-term outlook on any of these stocks. Sales Education Channel asks, do you think people are overreacting to Apple's decision to stop disclosing device sales? A little bit. Yeah, that was definitely a couple weeks ago. That's when they announced after earnings. They actually beat earnings. Apple did very well with earnings, and I have no idea why people reacted the way they did. So you can see here, good question, Sales Education. You can see here that Apple's down 10% for the week, and if you go to the 1 month performance, you can see that Apple is pretty much down almost 20%. That's insane. So let's go to 3 months. Down 20% over the past 3 months. So yeah, if you guys are big believers in Apple, this could be a good opportunity to purchase Apple. For the year, I think they're down. Yeah, they're just pretty much flat for the year. Still down 1.5%. So yeah, pretty scary for Apple, but to be honest, I'm not that surprised. Unit sales are okay. I think they're a little bit lower than expected, but the earnings are definitely still there. So they're baking in that margin, you guys. They're baking in that fat margin, but we'll see. I don't know if the middle class can really, afford to, dish out $1,000 every year for a new phone. So, that's just something that I personally don't do. I can afford it. It's just there's no point, in my opinion. Okay, it's still a solid company though, don't get me wrong. Branolope17, Bruno, how are you doing, buddy? I don't think I've ever seen your name on this live stream, so thanks for joining us. Would you recommend to buy now or wait for a bigger drop? I believe you're talking about Apple. So it just depends. I mean, one of their suppliers was surveyed, and I think that information leaked out, and that's one of the biggest reasons why it's even down more this week. I just think that Apple doesn't have as much material being ordered. They don't have as many units being ordered for manufacturing. So one of their distributors that supplies a certain component, I forgot which component it was or what material it was, they definitely said that Apple is kind of lowering their orders of whatever those materials are, meaning that they project sales to be down. So that's kind of what spurred this loss for Apple this week. Mr. Opio, thanks for joining us as well, buddy. I don't think I've seen your name here either. Again, this is every Saturday at 12 p.m. Eastern Standard Time, so thank you for joining us, everybody. Probably not the best time in the world because there's college football, there's a bunch of stuff going on, but it works, but we may move it. Who knows? So Mr. Opio, when company A acquires company B, does that mean that company A is doing well and becoming a potential great investment? Cody. Okay, thank you, Cody, for the question. So there's many different reasons, and I don't know why I'm still showing FinViz. Sorry, let me put on my big talking head. So there's many reasons why companies acquire other companies, okay? Sometimes it's just a strategic move to where they want to dominate one certain segment of the market, okay? So if you have companies that are, say for example, like Google or Facebook or whoever, and they see a competitor that can complement their current business, sometimes those companies just hire for the talent. It's called an acqui-hire. So ultimately, say for example, company A is the big company like Google, Facebook, whatever, and company B is a small company like Oculus or someone that's doing something cool in the space that can complement Facebook or Google or whoever. Sometimes those smaller companies, they make ripples in the market and they get attention in the market because they have a great team, great product, really knowledgeable staff, great sales guys, great developers, great CEO, great leadership, right? That's kind of what Facebook did with Instagram. So they'll acquire that company just for the talent alone. So that company B, the small company, now becomes absorbed by company A, which ultimately gets company A that talent. So now instead of being Oculus employees or Instagram employees, they are now Facebook employees. There's other reasons why companies acquire other companies as well. Sometimes there's value. Sometimes company B could be struggling and it complements company A's business and it just makes sense for a buyout to happen. They get absorbed and they acquire that business. So this is very popular. I used to work for a professional services firm. This is when I sold Microsoft products. Ultimately, it's an accounting firm or a professional services firm that does, HR. We do technology, so we implement Microsoft products. We do accounting. We do small business accounting. So instead of just trying to grow organically through getting new business and new business development efforts, my company was acquiring smaller companies strategically all across the United States, and that's another reason on how they were growing so fast. So Aravind Kumar, how you doing, my friend? Thanks for joining us again. What about automobile finance stock companies in the future? So good question. I think automobile companies are trying to adapt to the new times, meaning that I think there's going to be a big government push for green or clean technology. So I think it's inevitable that the combustible engine, as it is right now, it's going to go by the wayside to more electric or greener, cleaner options. Maybe a combination of let's call it solar and electric. Maybe the tops of cars will be solar panels. Who knows? I'm just talking about the future here. But in the short term, obviously, they're doing a great job of getting their miles per gallon up, and they're doing a great job of adapting to what the consumer wants. So there's big push by Ford just to go into the crossover space. So if you're from India or from Asia, you may not know what crossovers are. Crossovers are essentially cars that are built on a sedan's platform, but they're kind of molded or made into like a small SUV, right? It's not necessarily like a truck. You're not getting like a Land Cruiser or an F-150 or something like that, or an Expedition, but you're getting like a Ford Escape, which is convenient for, a small family, if you have a dog, to haul groceries, things like that, but it's still built on that sedan's platform. So actually Ford got rid of all their sedans, Every single sedan they got rid of except for their sports cars like the Mustang and things like that. And they're only playing in the SUV and crossover space along with their trucks and sports cars. So that's a long-winded way of answering your question. I think automobile companies will need to adapt or go by the wayside. And I really think they need to anticipate government legislature bringing in, hey, you need to average X amount of miles per gallon. You need to be electric. You need to be this. You need to be that. So ultimately, they need to be able to adapt with whatever the government says. Otherwise, they're going to go by the wayside. And thank you for the question. Okay, Matic Play. Matic from Jamaica. Jamaica, nice. Thank you for joining us. Appreciate it. Lou Evans, is there a name or phrase for people, let's see here, who buy during or after the holidays as far as the economy? I'm not sure what that question is. Maybe I misread it. Is there a name or phrase for people who buy during/after the holidays as far as the economy? I apologize, Lou. I don't understand that question. Maybe you can elaborate a little bit and I'll get back to it. So sorry about that. Maybe I'm just reading it incorrectly. Jerry Nix, how's it going, Marco? Hope everyone had a great Thanksgiving. Yep, appreciate it, Jerry. Bob says, gotta go pick up my car from the dealer. Thanks, Marco. My pleasure, Bob. Thank you for being a subscriber to The Informed Investor, and I hope I'm providing value. I'm going to try to get into a little bit more of a couple swing trades here because I think there's a lot of dips that are going on. So stay tuned for that. I appreciate your patronage and your support, Bob. Matic Play, what's the difference between stock and trading? So there's not necessarily a difference. I think one, they coincide with each other. So you trade stocks. So I'm not sure exactly what your question is. Jackie says, I'm listening. How you doing, Jackie? Nice to see you. I see you commenting on a couple of my videos. I hope you're getting value from those. So let's go back to sharing my screen here. So a little bit of news here, you guys. So equities extend slide as tech bear growls. So let's see here. Sorry, I didn't share my screen on the software. You're probably just looking at me read. So equities extend slide as tech bear growls. So what that means is that, as you can see from the FinViz map, that everything was pretty much red last week. There's only a few companies. Let's go to 1 week performance. There's only a few companies that were green. Real estate investment trusts down here. Some of the financials didn't get hit as hard, even though the big boys did. You can see that Visa's down 6%, MasterCard down 9%, PayPal down 10%. That could be an opportunity for a swing trade there. Let's see here. Okay, got a new subscriber to the stock pick. Thank you for that. So you can see here that the FANG stocks closed in a bear market on Monday, further shaking confidence in a group that has propelled the long-term bull market. So that's absolutely true, you guys. So what they mean by that is, if you look at the technology stocks up here, you have Amazon, you have Apple, you have Google, you have Netflix. They're down 10.7%. I know they shot up after earnings, and now they kind of came back down to reality or back down to earth. So we'll see about that. I'm surprised about some of these guys here, like Home Depot down almost 5%, Lowe's down 6.27%. AbbVie is finally coming back down to earth after being up for a couple weeks here. So we'll see what's going on. Interesting. So this is kind of cool. I wanted to touch on this, you guys, just because Black Friday was obviously yesterday, and people are still kind of in that consumerist, buying mode or mentality, if you will. So retailers are preparing for one of the biggest weekends of the year, with an estimated 164 million Americans going shopping Thanksgiving Day through Cyber Monday. So think about that for a second. 164 million people. Let's just say everyone buys, $10 worth of stuff. That's an insane figure, you guys. Let's say they buy $1 worth of stuff. That's $164 million. But, people are buying TVs, they're buying, cars, they're buying everything, man. It's insane. So I'd just like to know in the chat below, or in the chat off to the side, you guys, especially for my foreign viewers, how do you guys feel about that? Do you feel like this is a good mentality to have, this consumerist mentality? I mean, do you feel like this is something that is good for society? All this marketing and consumerism. I'm just naturally curious about that subject. I'm all about psychology. I think that's pretty interesting. So Aravind Kumar says, what about NBFC, non-banking finance company, in the future? So based on that title, I'm assuming you're talking about companies that are kind of like almost like the PayPals of the world, or like Stripes or Venmo. Obviously, Venmo and Stripe, Venmo is not public, but I understand your question. So I think anything having to do with like digital payments, even companies that are kind of like, Visa, MasterCard, the companies that are going to start playing in cryptocurrency or in Bitcoin, or even in blockchain, like blockchain technology and blockchain stocks, I think those are going to be huge in the future. So I may make another video about top 3 blockchain stocks to own. And I apologize, you guys. I've just been so busy between this, my private membership group. I still work full time. My wife and I are trying to get a house. Like, I'm just so swamped. So I need to start making more videos back in front of the whiteboard, rather than just this kind of short form content. I do like these live streams, but they're a lot of work. It takes up an hour of the day. So to get back to your question, Aravind, I think that those companies, if they play in the right spaces, like blockchain, and they're forward thinking and then they're in the right direction of moving forward, not going backwards, I think those are definitely good stocks to own. But again, you have to look at the management, you have to look at the fundamentals, you have to look at the numbers before you invest in just any company. Michael Clark, how you doing, Michael? Nice to meet you, buddy. I think this is the first time I'm seeing your name here. Is it cool to only have ETFs and a Roth IRA? Yeah, absolutely. The only thing that I own, literally, I own one equity in my Roth IRA, and that's a target fund that essentially acts as like an index fund or an ETF. So for the viewers that don't understand what I'm talking about, or what Michael's talking about, an ETF is an exchange-traded fund. So an ETF is a basket of stocks. So there's, instead of owning one share of Apple, one share of Amazon, one share of whatever, you own one share of the ETF, but within that ETF lives many equities. So ultimately, my Roth IRA, all I do is contribute $5,500 a year to this Roth IRA, and it's one holding. It's just a Vanguard Target Index Fund, or it's a Target Fund, excuse me. So what a Target Fund is, and for anybody that's new to investing, I 100% step one recommend that you, let me actually put it on here because I'm trying to make a point. I absolutely, step one, max out your Roth IRA. $5,500 a year. You'll retire, if you start in your 20s, you'll retire with at least $800,000. I can almost guarantee that. Obviously, you can't guarantee returns. There could be World War III, who knows? But my point is that there's so much money invested in equities for people's retirements that it's not going anywhere anytime soon. So to answer your question, Michael, I know I'm going kind of long-winded on all these, is that, yeah, it's absolutely okay to only have ETFs in a Roth IRA. However, those ETFs should cover different sections. So you should have an ETF that covers growth stocks. You should have an ETF that covers bonds. You should have an ETF that covers international stocks. A lot of people, they believe in the 3-fund portfolio. So ultimately, all they do is invest, I believe it's like 60% in a growth ETF or growth mutual fund, 25% in international stocks, and then the rest in bonds. I could have those percentages mixed up, but that's pretty much a 3-fund portfolio. Me personally, like I said, I have that target index fund, and that's our target date fund. That's what I like. It's easy. Lou Evans says, like a nickname. Not exactly sure what we're talking about, but could be about the acronym of ETFs. Eric Estrada, good morning, Marco. What do you think about Tesla, and where do you think it's going after 2018? So Eric, thanks for joining us, buddy. I think this is the first time I'm seeing your name on here, so thank you. So Tesla is a tricky one. Tesla is one of those stocks that can go to $500 a share, or it can go to zero. Who knows? Just with Elon Musk at the helm, I know he was kind of replaced here recently, but ultimately he's the kind of guy who's a big BSer in my opinion. He's a big talker. He's kind of like a Mark Cuban of the Dallas Mavericks, or like a Trump almost. Everything's great, everything's doing well, we're the best, we're this, we're that. And especially on Twitter, you can see that he even considered taking Tesla private at X amount of dollars per share. So until there's a little bit more stability in terms of management and decision making, I don't know. I'm on the sidelines with Tesla. So right now it's hot, it's doing great. I know Jeremy from Financial Education really likes Tesla. He also really liked GoPro as well. So take that with a grain of salt. But ultimately Tesla, pre this earnings release, I mean, they look like Lehman Brothers in 2008. Like their numbers were not good, and I think a lot of their debt is going to be called here. So we'll see if they have enough cash to cover. I do think they're profitable now, but ultimately, I don't own any Tesla, so we'll see. Aravind Kumar, difference between ROCE, return on capital employed, and ROA, return on asset. No idea. That's a good question. I know what return on asset is. I just don't know what ROCE is. I've never really studied that metric. I'll have to look into that. I don't know that one, so I apologize. I don't want to talk, about something I don't know. Lou Evans, good question, Eric. I know by the end of the first quarter next year, Tesla will release the base Model 3 starting at $35,000. They just released the mid-range battery Model 3 about a month ago. Yeah, so how do you guys feel about the Tesla cars in general? I've driven Teslas before, and they're really cool. But I think they could be the future, but ultimately I like combustible engines. I just like how they sound, especially performance cars. But I think, the younger generations, they absolutely love Teslas just due to the technology and all that. I think inevitably my kids probably won't even know how to drive a car. It's all going to be self-driving in 20 years. That's just my opinion. It's going to take a while, but I think that ultimately highways are going to get smart, infrastructure is going to get smart. I don't know who's going to pay for all of it. Maybe Trump has that, $3 or $2 trillion infrastructure plan in mind, but ultimately, yeah, I don't even know if my kids are going to know how to drive, which kind of sucks. I love driving. I like driving stick. I love driving manual. I think pretty soon you're going to need a license to be able to drive, to self-drive your car and not get driven by the car, if that makes sense. So Aravind Kumar, is it important to look at PEG ratio of stock for valuation? Absolutely. So let me pull up what a PEG ratio is just in case for those of you that don't know. So a PEG ratio is your price to earnings to growth ratio. So in layman's terms, let me see if I'm sharing my screen here. Okay. The price to earnings to growth ratio is a stock's PE ratio divided by the growth rate of its earnings for a specified time period. So this is kind of like a snapshot to show a stock's value while taking the stock's earnings into account. So I guess this is considered to provide a more complete picture than a PE ratio. So very good question. So yeah, I absolutely take this into consideration when I'm evaluating stocks. I know the PE ratio is important. That's kind of like a picture of the company's value or the price, if you will. So for those of you that don't know, a PE ratio is essentially your price to earnings ratio. So you take the price of the stock divided by the earnings, what the company is actually earning, hence price to earnings ratio, and that kind of gives you a metric. Okay, is this stock quote unquote expensive, or is it quote unquote cheap? Does it have value because they're earning a lot more money than what the stock price is, if that makes sense. So good question, Aravind. Yeah, you can see all the different calculations here. I'm not going to go into this because it would make for a boring live stream, but definitely look this up, you guys. This is a good metric to understand. Okay. So moving on, let's see here. Let me see if we got any new questions. Okay. Lou Evans, Boof Cohn. Hey, Marco, you've been putting out a lot of great content for us this week. Thanks a lot. Thank you so much, buddy. I appreciate the kind words. It's a lot of work working full time and then recording videos and outlining and streaming and stuff. So I hope you guys really appreciate it. Frank Jr. finally caught a live feed. Greetings from CT. I'm assuming that's Connecticut. Thank you so much, Frank. This is the first time I'm seeing your name, buddy. Thank you so much. Alberto Cruz, what's going on, buddy? Nice to see you, man. I appreciate you joining us. So let me share my screen here. Okay. So I posted this on my Instagram feed. It was just a quick little story. But Carlos Gasson, if I'm pronouncing that correctly, he heads the Global Alliance of Renault. So Renault, Nissan, and Mitsubishi, they're actually, I don't know exactly how they're in alliance. I don't know if they share parts or engineering or platforms or what. Maybe someone in the comments can or the chat can shed more light on this. But ultimately, he's been arrested in Tokyo for a suspected breach of Japanese financial trading. So I guess what he did is that he underreported his income for years, and they're seeking, I guess, to fire him for serious misconduct. So shares of Renault, which is French, where Gosselin, the CEO, fell as much as 12% in Paris, while Nissan global depository receipts plunged more than 11%. So this is kind of interesting, you guys. Maybe you guys can shed some light on this. Even if you don't know the story, in and out, you can see that the guy, did some shady stuff, got fired, and now the stock price is paying for it. What do you guys think about that? Do you guys trade the news? So what I mean by that is when this big piece of news that I just read you comes out, do you guys automatically sell shares of that company? Do you wait for the dip and buy it again? Do you guys do any active trading like that? I'm just trying to get more insight into what my viewers are doing. So let's check the chat here. Aravind Kumar, how much market cap will Apple go in the long term? That's a good question. I think it all depends on, if their company's still, hungry, if they still innovate, if they still, create products that people want. I mean, Apple is they're a great marketing company. I'm streaming from a MacBook right now. I love my MacBook. It's a 2015, but people that are Apple fanboys, even they were saying like the new MacBook sucks, the keyboard sucks, there's not as much travel, blah blah blah. So I'm not going to get into a tech discussion or a tech debate, but ultimately I think that Apple products are great. I just they need to stay focused. They can't give up too much function for form. Okay. So let's see. Any advice on what to do if you come into a large settlement? I already have my retirement from work. Okay, so I'm assuming MDM10, nice to see you here, buddy. Thanks for the question. I don't think I've seen your name here yet. We have a lot of new people commenting today. That's really cool. There's always, the solid, 10, 15, 20 same people commenting, which is great. I've been reading a lot of new names here. Maybe I just haven't noticed in the past. Thanks so much for joining us, you guys. We got about 30 people on the live stream right now, which is good. Usually we have about 40. Maybe, there's a lot of, college football and stuff going on. Who knows? But ultimately, to answer your question, what to do if you come into a large settlement? So I'm assuming, maybe this is from a lawsuit or whatever. It doesn't matter. So you came into a big source of funds. I would definitely break that down into certain categories of how you want to save it or invest it. Obviously, leave some self for your pleasure. Like if you already have retirement taken care of, like you said, definitely enjoy a little bit of it. Allocate certain percentages. What I learned for personal finance, at least, is the 50-30-20 rule. So essentially 50% of your fixed bills, like mortgage, car payments, groceries, health insurance, things that are coming every month, cell phone, whatever, Netflix. You should allocate 50% or no more than 50% of your take-home monthly pay to those things. So if you and your wife, or you single, or whoever, you and your partner make, let's just call it for easy numbers, $5,000 a month, that no more than $2,500 of that take-home money should go towards fixed expenses, as I mentioned. The 30% should go only towards like hobbies, entertainment, vacation, travel, things like that. All the pleasurable things, going out to eat in nice restaurants. So that 30% of that $5,000, no more than that, should go towards those things. And then the last 20, so you have 50 plus 30 is 80%, plus 20 is 100. The other 20 should be allocated towards savings. Does that make sense? So you're in a situation where you said that, you're in a situation where you said that your retirement is already taken care of from work, which is awesome. I would maybe mess around a little bit with those numbers, make sure all your fixed costs are taken care of. You already have the savings, maybe save a little bit less than 20, do 15, 10, 5%, somewhere around there. And then just go heavy on the entertainment, man. If you're already at that age where you're, getting into retirement and that's taken care of, enjoy life, man. Go travel. Go on a 10-day cruise. Go to Alaska. I don't know. Go live your life, man. Go to Italy. Go to the Adriatic. Do something nice, man. I'm a big believer in that. Money is great, but at the end of the day, if you can't enjoy it, who cares? If you're not traveling, if you're not, drinking fine wine, if that's what you like, if you don't drink alcohol, whatever. My point is, enjoy life. Go travel, go talk to that girl you always wanted to talk to. Have fun, man. So Bruno says no active trading here, long term, good. So this is a good channel for you, buddy, because we're all about long-term value-add companies. Frank Jr., any thoughts on oil? Yeah, oil is getting absolutely crushed. I think it hit its lowest in a long time. Let me share my screen here, and let's look up oil. Good question. crude oil prices. Okay, so now yesterday it's down to $50 a barrel, which is insane. So it's down more than 30% in 7 weeks. Let's go to oilprice.com. I've never been here before, so sorry if this is not a reputable source. Yeah, you can see here that, $50.4 a barrel. It's crazy. So if we go into here, let's look at the chart. Yeah, past 3 months. This started at the end of September. So yeah, look at this, guys. It went from like 74, 75 a barrel all the way down to 50. So who knows? If you've been shorting oil, you made a lot of money. If you're long oil, then you're kind of hurting right now. So yeah, good question. I think this is something we should all be aware of because oil is a very international, a very political, a very manipulated commodity, to be completely honest with you. So I know a lot of it has to do with Saudi Arabia. They said that they would increase their supply. You have to realize Russia's a huge player in that, especially over by the sea over to the north, and also Siberia. There's a ton of oil reserves there, even though Siberia, I think it's a little bit too hard to drill there, too cold. Aravind Kumar, plastic sector companies, will it survive in the future? Well, I mean, I think so, because plastic is in everything. I mean, everything that we drink out of, everything that we eat from, everything, a lot of people, those just water bottles. I know they're trying to go green, but, I think they're trying to get rid of straws, like plastic straws, because it's hurting the environment. So they're going to these cardboard straws, which like dissolve in your mouth, which are freaking disgusting. It's like, are that really that many fish dying? I don't know. I know that sounds very harsh, but, that's kind of what I'm thinking. So good question, but yeah, I mean, oils and everything, which means plastic isn't everything. So the two go hand in hand. My dad is actually a mechanical engineer. He's worked with plastics and plastic injection molding his whole life. He worked for companies that make toys for kids, that make hand sanitizer dispensers. These are all plastic components, you guys. Plastic is hard, it's cheap, and you can mold it to pretty much whatever you want. So yeah, definitely I think plastic sector will survive. Is there any reason why you're asking about that specifically, Aravind? Like why you brought that up? I would love to hear a little bit more. Spilled Whiskey, glad I finally caught a live stream. How you doing, my friend? Thank you for joining us. Another new person in the chat whose name I haven't seen. Thanks for joining. What's your position on JD now after the earnings report? Good question. Let's pull it up. So I did not invest in JD, but I know it's super popular with a lot of people on YouTube. I know that they were down for the year, I think like 50%. So let's see here. Yeah, you can see that for the year they started at 40, now it's down to 20. So they're down, yeah, a crap ton. What happened during the earnings report? Let's see here. JD's still not a buy. Can JD rebound from its multi-year lows? Shares of JD recently tumbled 8% to a multi-year low after the company posted mixed third quarter results. Its revenue rose 25% annually to 104.8 billion. That's Chinese. I don't know what that currency stands for, but that's $15.3 billion, which narrowly missed estimates. Interesting. So I don't know, man. I don't invest in JD, but I know it's super popular. If I'm looking at this just very quickly, you can see that the company's always kind of been in a roller coaster here. Looks like they figured some stuff out in 2017 and then just kind of been tanking from there. So I really don't know, man. This is an interesting stock. I don't play in it. I know that one of my buddies who lived in China for 2 years, he absolutely loves the company. He thinks they're light years ahead of anything that we're doing here in the States, which I don't know if he was just exaggerating, but we'll see. That's a very good question. So I know it's kind of a very broad answer, but I've never invested in the stock, so I'm not going to talk out of my rear end. Bufcon says, I think you'd be better investing in vegetable oils, palm oil, for example. That's a good point. Why do you think that? I don't follow that industry very closely either, but let's hear your thoughts on that, you guys. So let me share my screen here. I had a couple other pieces of information I wanted to pull up during this live stream. So let's talk about the big guy, or the big elephant in the room if you play in this sector. The crypto sell-off intensifies. Bitcoin plunges 20%. So you can see Bitcoin tumbled as much as 20% overnight, hitting the 4,200 level, continuing a week of major losses in the cryptocurrency world. So what do you guys think about this? Let me grab water real quick, and then I'll meet you back in the chat below. Okay. Yeah, so this is saying that the plunge comes amid a broad sell-off in the equity markets, persistent concerns about regulatory scrutiny, and disagreements within the coin developer community known as a hard fork. So I've watched a ton of documentaries on cryptocurrencies. I guess a hard fork is kind of like when developers are making a change that, how do I say this, drastically, technologically affects the way, or fundamentally affects the way that it affects the cryptocurrency in a certain way on a technical level that I can't, explain because I'm not a developer. But like a hard fork is kind of like when Bitcoin went to Bitcoin Cash, kind of. So let's see. Other cryptos down sharply include Ripple, Bitcoin Cash, Ether, and Litecoin. Yeah, this is insane, you guys. So what are your thoughts on this? What do you think is causing this? Okay. No quick responses, so we'll move along. Don't want to just sit here. Will the real estate crash be huge? Will the real estate crash huge in certain intervals like stock markets 03, 08? There's definitely going to be a correction here. I've been looking at literally hundreds of homes to make my forever home with my wife. We plan on starting a family. We just need more room or a bigger house than we're in right now. I know that 08 was insane in terms of real estate. I pulled up a very interesting thing here. I don't have it. Oh, I have it on a text message. Let me see if this is going to come in. I think this is pretty important to show. Yeah, there's no way that this is going to look good because, yeah, it's on a cell phone. It's like a screenshot on a cell phone within a text. So, yeah, there's no way that this is going to look good. So ultimately what it was is I have access to the MLS. So the MLS, no matter where you're at in the United States, is called the multiple listing service. This is pretty much where realtors find what property is online, what's trading, what's for sale, who's showing an open house, how much it is, square footage, price per square foot, all that good stuff, beds, bathrooms, whatever, all the information on the property. So I went historically from 08 to 2018, so 10 years I looked over on a span of the average. I used three zip codes that I'm looking at for houses in. So here in Northeast Ohio, 3 suburban cities, right? So these are like, decent, suburban cities. They're not like super affluent, but they're not like, poor. I'd say this is like middle to upper middle class, right? So ultimately, I looked at the price per square foot per month over the course of 10 years. And from 08 to 2018, you can see it was kind of like a roller coaster almost. So in 08, everything hit the fan. Houses were trading for like $70 a square foot, $80 a square foot. And then you can see in 2009, 2010, it was like 70, 80 a square foot. And then you see like 2013, 2014, things start to tick up a little bit, 85, 89 a square foot. And then finally, the last 2 years, things are now trading in the low 100s per square foot. So what that means is, let's just say for easy numbers, the house is 1,000 square feet and it's trading at $115 a square foot, the average house on the market. That means that house is $115 times 1,000 square feet. So that house is on the market for $115,000. So now my buddy bought a house. His was like, $115 a square foot. My other buddy bought a house. It was like $113 a square foot. These are houses that you could have bought all day long for, $80, $90 a foot. But that's just the market that we're in now. And I'm kind of, stuck because, I'm only getting older every day. I'm trying to have kids. You know what I mean? So I'm trying to start a family. And you can see that like, right now we're kind of stuck because I want to buy a house, but I'm paying at the peak. The price per square foot is only going to go down from here, if that makes sense. So I guess to answer your question, will the real estate market crash? It's not going to crash as bad as 08 because it was just like insane price per square foot then. Everything hit the fan. Houses were on sale for like 60% of their original value. But it's not going to be as bad as 08 because 08 was just, everything was so tied in with those commercial mortgage-backed securities, and they were just throwing, and the ratings agencies were giving like crap products like AAA ratings. You know what I mean? Stuff that people are putting into like blue chip portfolios. And when those hit the fan, everything was affected. So no, it's not going to be as bad as '08, but there's definitely going to be a 10-15% correction here in the near future. So good question. So Aravind asks, which is profitable, building a house or to buy a house that's already built? It all depends on the market you're in, like I just said. So the average build price is like $150 a square foot where I'm at, $140. You can get a decent home. It's not going to be like, super custom built, but it'll be at that level. It'll be a very beautiful home. But you can buy a house. So I'll give you a perfect example. I'm looking to buy a house. They're asking $113 a square foot. I looked at new construction. It was right around $125 a square foot when it's all said and done. So do you want a 25-year-old home that's $113 a square foot with, more mature lot, maybe a little bit bigger yard, things like that, in an established development? Or do you want to go to brand new, everything's new floor plan, appliances, everything at $125 a square foot? So, you do the math. It's all a personal choice. Buying a home, if it's not going to be as an investment for like, renting out or a rental property or an income property, buying a home is a very personal decision because I may value having a mature lot, old, nice big trees, things like that you can't get when you build new unless you buy a lot with, old features. So it all just depends. If you're in a market where houses are trading at 70, 80, 90 bucks a square foot and you're building for 140, 150, I mean, you're consciously making that choice. It's obviously cheaper to buy a house that's, used or already built. So good question, Aravind. I think it all just comes down to what the market's doing. And right now is definitely a seller's market, at least where I'm from. Or I think the entire United States is a seller's market right now. Casey Israel, will gold go up if the markets crash? Absolutely. I think you start getting that paranoid factor of, hey, this crash is coming, you need to own physical gold. I mean, you got these guys like Peter Schiff that are just kind of like shilling for physical gold. I believe in physical gold, but, it's a small percentage of, my entire portfolio. Just because at the end of the day, let's get real, you guys. I don't think someone's going to drop like a EMP bomb and, destroy all the servers in the world to where we're going back to like bartering and stuff. You know what I mean? I don't think we're ever going to go back to that point. But ultimately, I think owning any physical commodity, I'm not talking like corn and stuff like that or pork bellies like bacon. I'm talking precious metals. Owning any physical precious metal is cool because there's something about it. It's tangible. That no one can take it from you unless they steal it. But I think that everything is so digital now that people are forgetting the value of tangible goods, if you will. That's why a lot of people, they prefer to invest in real estate rather than own stocks. Just because they can see the house, they can touch it, they can feel it, they can smell it, rather than just digits on a screen, or pixels on a screen. So yeah, gold will go up if the markets crash, absolutely, but it's not going to be like '08. I know silver went from like $15 an ounce to like 42 in the peak, and then now it's only going down from there. So good question, Casey. Thank you. And if you guys, just a reminder, I got the Black Friday sale on my Informed Investor Private Stock Market membership group. It's off 75%, and that expires on Monday. So it's $9.50. So if you guys don't take advantage of that now, I'll probably only do that every Black Friday. So it's going to be a year from now before I do that. So $9.50 per month, you get access to my portfolio, every single trade that I make, daily emails, weekly market commentary, equity research reports coming from a reputable research firm here in Northeast Ohio. It's just top of the line, top class. It's a lot of work, but I think people are getting benefits from it. So check that out below, you guys. Spilled whiskey, in your area of Ohio, are there more single-family homeowners or multifamily dwellings, such as rental properties with 2 to 4 units? Just curious what kind of market there is out in Ohio. So good question here, you guys. So I know this is the stock market Saturday or whatever, but I'm also passionate about real estate as well. Good question. So in the suburbs, it's definitely 90% single-family homes. There's obviously some 2 to 4 units mixed in there in the older parts of Cleveland. But when you go into Cleveland proper, like the actual city of Cleveland, there's duplexes, there's quads, there's apartments. I mean, Cleveland is a very old industrial city. Don't get me wrong, we have world-class establishments like, Cleveland Clinic, Key Bank, things like that. But ultimately, it just depends on where you're at. In the suburbs, it's 90%, single family homes. But those suburbs, man, you get a nice blue collar family in one of those, and they're renting out for, 11, 12, 1300 bucks a month. The guy works a blue class average job, doesn't want to own a house or can't qualify to own a house, and he rents, and he's a good renter. Sometimes you get, horror stories. It all just depends. But I'd say northern suburbs, north of where I'm from, or southern suburbs to Cleveland, those are good rental markets because you get good families in there, that just need a nice home. And if you're a good landlord, they'll stay with you forever. So good question. So Bruno says real estate prices are crazy here in Toronto. Yeah, Toronto is insane. So I don't know what to tell you, man. I mean, Toronto is an international city. It's a beautiful city. But I look at price per square foot in Toronto. You're looking at like $200, $300, $400 a square foot. I was just with my buddy from San Diego. He was in Cleveland. He was in town last Friday night, and we caught up. We had a couple beers or whatever. And he's like, yeah, I'm thinking about getting this condo. It's close to downtown San Diego. And I'm asking him, like, what is it per square foot? Like $200, $220. I'm used to like $100 a square foot, and even that is high right now for Cleveland. And he shows me it, and it was like, it's a nice condo. Don't get me wrong. It's beautiful. But, dude, it was like 1,200 square feet. It was almost like, no, it was more than $500,000. It was like $420 a square foot or something crazy. And I'm just like, do you know what $420 a square foot buys you in Cleveland? It buys you a freaking mansion, dude. It buys you a 10,000 square foot mansion. So let's see here. Boof Cohen, so will gold remain a solid investment for the long term? Like set it and forget it. I think gold is always going to be there. It's always going to be, part of human society. I think there's a ancient attachment to it. There's a gentleman on YouTube. Let me show you his channel, guys. Let me share with you a little bit here. Let me see if I can find him on the fly. He has an excellent series on gold and currency and all that stuff. So let's see here. What is his name? I'm going to drive myself crazy. I think one of his videos was called Currency versus Money. Yes. This guy right here, Mike Maloney. So if you guys want to spend the whole weekend instead of binging like Netflix, this dude right here, Mike Maloney, let me see if you can even see the screen. Yep. He definitely seems like he knows what he's talking about. I've watched a lot of his videos. It's just interesting just from a perspective of knowing, the history of money, knowing the difference between money and currency, secrets of money, things like that. He talks about cryptocurrency. He talks about precious metals. He talks about everything, you guys. This is a really cool channel. So I'm not the expert on precious metals. This guy definitely is. And keep in mind, guys, everyone on YouTube, I feel like they're trying to sell you something. So just take that with a grain of salt. Because at the end of the day, I'm doing this out of passion. Yes, I have my membership group, but trust me, I'm not getting rich off that. I can't. There's no way I can live off that. I mean, if we get more members, absolutely. But any support you guys can give me, I'd appreciate. So let's see here. Let me go back to the main screen, and let me see if there's any more chats. So thanks for the question. Alberto Cruz, how you doing, buddy? Can I lock in this discounted rate after I already subscribed? I guess you can cancel and resubscribe with the $9.50. Feel free, but yeah, you'd have to cancel your current membership and resubscribe. So yes, it's that $9.50 to answer your question is in perpetuity. So the course is eventually going to go back to $38 a month. I have it at $19 a month, 50% off. I'm going to have that for a little bit here just to get the group growing. And then I may even stop memberships completely and just keep whoever's in the group right then and there and then relaunch it. Maybe that'll spur more activity. But we're getting, 1 or 2 members a week. It's really cool. So it's nice to see that. And then for Black Friday, it's actually 75% off the $38, so it's $9.50 a month. And there's a ton of value, Alberto, as you can see just from those equity research reports. I'm sure you've gotten value out of those. Wen Chang, Toronto is the New York of Canada. Absolutely. My wife's cousins live there. I go there a lot. It will never be New York City. Yeah, that's true. But I like Toronto. Toronto's nice. It's a nice international city. It's got a really cool vibe. I spent a New Year there, which is pretty cool. I did New Year's Eve. I think, what's the big club in Toronto? Government? I think they shut it down. Yeah, Government or Industry or something like that. It's not open anymore, but that was a fun, man. It was a huge nightclub. It had 7 rooms, 7 concert halls. It was insane. So that was a really fun New Year's. Let's see if we have any more news that I wanted to touch on. We touched on crypto. Oh, here's a cool one talking about Tesla. I should have brought this up. So the trade war prompts Tesla to cut Chinese car prices. Okay, so we have Tesla has slashed prices of its vehicles in China by as much as a quarter to absorb the impact of tariffs from the U.S. Trade war. So Beijing imposed 25% duties on $34 billion of American goods, including cars. So I guess, earlier this year, Tesla also cut prices of the Model X and Model S in reaction to the tariffs, but then later raised them. So the reason I brought this up was to ask you guys, do you feel like the trade war is going to last here? And if so, how much longer? My opinion is that this is a symbiotic relationship that ultimately needs both parties to exist. Don't get me wrong, China plays all over the world, but U.S. imports a lot more from China than we do from them, or than China does from us, us being the United States. So pretty interesting there, you guys. Let me know in the comments or the chat how much longer you think that this is going to last and if Trump is doing anything about it. So is Apple a buy now? And happy Thanksgiving from Wen Chang. Thank you so much, Wen. I hope if you celebrate, I don't know if Canadians celebrate Thanksgiving. I may sound like an idiot for saying that. I just don't know. Ultimately, we celebrated on Thursday, and it was good. I went to my mom's house or my parents' house, and my mom is an excellent cook when she wants to cook. She doesn't cook all the time, but when she does, it's very good. And then we went to my mother-in-law's house, which was fun. My wife has a very big family. Went there, ate, and talked about pretty much everything. So is Apple a buy now? Yeah, we touched on this earlier in the live stream, so if you want to go back, these are automatically posted to my channel after they're done, and we're coming up almost on an hour here. But ultimately, if you're a long-term investor, I think this is a good time to at least add more shares. It depends on if it's going to destroy your cost basis or not. I've been investing in Apple for a long time, so ultimately, we'll see. I mean, we'll see if I'm going to invest in more or not, but I'm in it at a good cost basis, so I'm just kind of, holding here, if you will. So, okay, guys, we're almost at an hour here. Any more questions? I'm all newsed out. I don't really have anything else to talk about. One last article, sorry. Oops, I'm clicking all over the place here. So 3 reasons to buy Alphabet stock now. So this is just one person's opinion on seeking alpha. This is not, the Holy Grail or the Bible. But you can see here that some of the bullet points are saying that Alphabet stock is down by nearly 20% from its highs due to market weakness. Fundamentals remain strong. Performance is healthy. Valuation levels are quite attractive. So I'm actually going to be recording my top 3 stocks to buy for December, and I was actually thinking about doing this as one of them. So what are your thoughts on Alphabet at this point? And I'll wait for the comments below. Okay. Wen Chang says, just joined. Would you make Apple of your portfolio? Apple may or may not be in my portfolio. Only one way to find out. The Informed Investor, 75% off below. Cash Out Cass. How you doing, Cash Out? Nice to see you, buddy. I think you're a new name here. Thanks for joining. Spilled Whiskey. Sorry, buddy. Don't want to skip you. One last thing. Amazon moving to New York City, Long Island. What are your thoughts? Yeah, so I touched on this in the Sunday market recap last Sunday. Amazon is moving to Long Island and also in Virginia. I forgot exactly what city in Virginia. I've been following it since last September. I live in Cleveland. I know people talked about Columbus, Ohio potentially getting it. They talked about the Carolinas getting it. I think that it's a good move. I mean, I think that there's a lot of talent in New York City. I just don't know where the hell they're going to put it. I mean, Long Island City, let's pull up a map here, you guys. I did not hear anything about location. Like Virginia, yeah, there's definitely room there. Long Island City, I'd have to imagine that it's cramped. So let's see how big this thing's going to be. Or maybe it's already in a pre-existing building that they're going to renovate. So you can see here that you're going to get a lot of talent here from New York. So it's going to provide a lot of jobs, which is good. But, man, I couldn't imagine living here, man. Anybody from New York or Manhattan on the chat or on the live stream? I mean, this is just a cluster, man. It's nice to visit, and that's why I live in Cleveland, man. Got a lot of stuff. Got the same stuff here, but a lot less crowded. So Long Island City, let's take a look. Sorry, everything's loading slow because it's really heavy on the resources of the laptop live streaming. So who knows where this thing's going to be, you guys. Maybe you guys can shed some more information on it. But ultimately, I think it's a good move. You have a lot of talent. There's a ton of people in this area. They wanted to get an East Coast presence, which they got. So I think that it's a good move for Amazon. We'll see. Let's go back to the chat here. Okay, Cash Out Cass. My question is, how can I educate furthermore on utilizing economic factors and political news to advantage to trade commodities, ETFs, stocks down to on market weakness? Yeah, we talked about this earlier. I mean, I just posted an article where it says that, Nissan and Renault's CEO actually was fired, and then their stock went down 12%. So good question. I just think you have to have your finger on the pulse. Just keep in mind, man. I mean, a lot of this stuff is already baked into the price. That's what you got to realize. So I think until stuff really hits the fan, like in '08, it's not going to be in the know for the public, right? So a lot of these things are already baked into the price before you even hear about them. So stuff that's happening to oil now may already be part of a bigger picture with, Saudi Arabia or Iran that we just don't know about, right? So that's just my personal opinion. I would take a look at fundamentals, like the numbers don't lie. Take a look at the management of companies when you evaluate stocks. I think you have to look at, like, depending on what you're investing in, there's always business cycles, right? Kind of like economic cycles. So take that into consideration. If you're investing in a stock that, let's just call it, how do I say it, is very seasonal. Obviously you need to know when their peaks and valleys are, right? So that's kind of just, common sense. So earnings is always an interesting time to trade. If you know that, a company's going to have better earnings or crappy earnings, you can put your bet on that as well. So I know that wasn't the greatest answer to that question. It's just that understand business cycles, understand fundamentals, understand every financial ratio, understand management teams of the companies, understand what their moat is, the moat being their competitive advantage. Understand all that stuff, man, because that's going to help you in the long term, especially if you're a long-term investor. Aravind Kumar, cool Instagram profile, good photos. Thank you, sir. I appreciate it. I should be more active on there. I check every day. I definitely post stories every day. I just don't post too many pictures. Spilled Whiskey says, I'm from NYC. Heard they're taking over the city building. Okay, so there you go. Yeah, it's already an existing building, because when I pulled up that map, there's not a lot of green space right there. Paige Brooks says, hi. Hello, Paige. How you doing? I think you're a new name as well. But guys, my brother-in-law is coming over. We're actually going to watch Ohio State and Michigan. So I hate to cut this. Well, it's not cutting it short. I'm actually over the hour here. But thank you so much for your questions, guys. I really appreciate it. I know this sounds like a pitch fest, but I'm putting in a lot of work. Check out The Informed Investor, the link below. It's my private stock market membership group. Ton of value. Even if you want to support the channel, $9.50 a month. What is that? 3 coffees? Like, really, guys? It's 75% off. If you want to support me, I appreciate it. It just helps motivate me. I'm not one of these guys that are making thousands of dollars every month off of YouTube. It's actually on the contrary there. So any support just keeps me motivated. I really appreciate it. Or at least my brother-in-law says on my way. Michigan is losing. That's right. Go Buckeyes. So any support you guys can give me, I appreciate it. You know me, I've been providing a ton of value on YouTube for over a year now. Never really had my hand out for anything. At least share the videos, at least tell your friends about the channel. Thank you so much, guys. I really appreciate it. I'll see you next Saturday.